This podcast is provided for educational, informational, and entertainment purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose.
Hi everyone, welcome back to our ABCC's podcast. This is our third live episode that we have, and today we have Alan with us as well.
Hello, everyone.
Okay, so today's topic that we're going to talk about, Alan, is about ETFs, exchange traded funds. Apparently, ETFs has been very much talked about recently. So why has it been gaining a lot of popularity, especially in the crypto market? It's because ETFs, they have generally been traded in the traditional stock markets for many years. In fact, for many decades already. And we have seen that a lot of them have had a lot of success because of things like the low transaction costs, things like being easily accessible to even the retail investors. So not only that, when we talk about why the crypto markets have adopted ETFs recently, especially in the news, we can see that crypto ETFs have become one of the most hot topic recently.
Yeah, I think there's like two main types of ETFs out there for crypto or blockchain industry. The first one is focused on businesses that provide service or developing their blockchain technology. So it would be like an ETF holding like company like Coinbase or other like blockchain company. The second type of ETFs, which actually been on news recently a lot, is the assets-backed ETFs, which the funds actually holding Bitcoin or Ethereum or other cryptocurrencies. So I think the most popular one in the past few years, probably like Grayscale. They holds I think like one of the largest holders of Bitcoin as a fund. I think now recently a lot of these traditional finance or all these institutions try to file a spot ETF with the US Securities Exchange Commissions, the SEC, to actually have a spot ETF listed on NASDAQ. And I think one of the most noticeable one on the news is BlackRock. So as you might know, BlackRock is the largest asset management company in the world. Basically, they own a lot of different asset class, and having BlackRock officially applying for spot ETF with SEC is actually, we see it's like a huge opportunity for the crypto market, as we can see the largest asset management company in the world is entering into the cryptocurrency market. So what do you think the main difference between like crypto ETFs and traditional stocks ETF?
I think a lot of people have been, like I say, a lot of people have been investing in traditional stock ETFs. Crypto ETFs will be interesting for these people, for these investors, because it has been something that they have been doing diligently. A lot of people even have things like, they just do an automated kind of investment strategy on ETFs. They invest on a monthly basis, automatically deducting from maybe their savings or their current account, automatically investing for them. So crypto ETFs, if they go the similar route like what the traditional stock ETFs are like, it might serve as an avenue for people to do passive investing as well. And that itself actually is very popular with I think the investors out there in general. And I think the difference is they might not have enough information on crypto itself, because as we can all see, actually not a lot of people have knowledge on individual cryptocurrency. For example, the knowledge on Bitcoin, who is behind Bitcoin, even we all don't know. So and on Ethereum, so on and so forth. So all these might hinder investors on putting in more monies, but also crypto is an ever-changing and very volatile asset class on its own. So on the ETF side, usually ETFs are they track a certain exchange or they track a certain benchmark. We can see ETFs in Singapore like the STI ETFs. We can see ETFs that track S&P 500. They track the Nasdaq as well. But if we talk about the volatility wise, usually these benchmarks, they are not as volatile as an individual cryptocurrency. Because an individual cryptocurrency like we see for Bitcoin or we see for Ethereum, it can go up and down maybe 3 to 5% a day even. So that might be something that also stops what investors want, because it might be too risky for them. I think other than that, what kind of benefits do you think crypto ETFs have?
I think one of the key benefits for or crypto ETFs is investors no longer need to take care of their assets. I know it doesn't match with the purpose of the creation of cryptocurrency, but there's so many people lose like their Bitcoin or get hacked like in the past decades,
Right.
And people might like this idea of like cryptocurrency, but a lot of people just don't have the knowledge to take care of their own funds. So I think like this kind of ETFs actually provides the investors that a third party or a asset management company will be keeping custodian of the assets. But given on top of that, like not just like people don't take care of the funds will use ETF, but even for I think like maybe a group of companies or even like a traditional mutual funds, because for those like companies or funds, it's really hard for them to see who controls the crypto keys, right? So it's you're not going to just hire someone to get hold of your millions of Bitcoin, right? Yeah. So I guess like this kind of ETFs will also be very suitable for companies investment or for mutual fund investment, because they actually solve a big problem for them.
I agree with you. In fact, like what you mentioned, a lot of them are just sitting at the sidelines. They're waiting for a big player to come in and take over a large portion of maybe Bitcoin, so that when they actually enter and they create the avenue for people to invest, then all these companies or individuals that are sitting on the sideline, they can actually come in and participate in with some kind of security behind it, some kind of sense of security, if I can say.
Yeah, I think on top of that, I think also the liquidity issues. Right. Because like, let's say, if you're like a large funds, if you go to any like crypto exchange, sometimes it's just maybe not enough liquidity for you for the funds to buy out, right? I think like having like company like BlackRock or like one of like largest asset management company in there, they also be acting as like a market maker in a way,
right?
Like they can be here to like guarantee some sort of liquidity for individuals or for let's just say like some like sideline funds to actually come in without influencing too much into the market.
And we can see that BlackRock, they are extremely positive about cryptocurrency. In fact, their CEO, Larry Fink, he actually spoke about cryptocurrency, I think just last week. Mm-hmm. He said that, if I can quote him, he said, as I said, I do believe a lot of crypto is an international asset. And he also said that he believes that BlackRock has a responsibility to democratize investing. So the role of ETFs, especially for crypto ETFs, is transforming it, investing itself. And he also mentioned something that is very, very interesting, because he said crypto and Bitcoin has a differentiating value versus other asset classes. And we're talking about all other asset classes. You have your bonds, you have your securities, we have your so many different asset classes. And he said that it is going international and it is going to transcend any one currency and currency valuation. That's what he mentioned about Bitcoin. So when he came out and made such a bold statement, it actually serves as a very, very important thing for people to think about, because the world's largest asset management company with over 1 trillion in assets, their CEO came out to say something extremely positive about Bitcoin and cryptocurrency. So, and with them coming out to lead the way in, filing with the SEC for the crypto ETFs, the Bitcoin ETF, we can also say that there is some kind of revolution that may be coming, with regards to Bitcoin. And a lot of people will come and ask, but are they really safe? Are crypto ETFs really safe?
I think one of the key to answer this question is probably lies in the regulation, like how the regulator is going to regulate all the ETFs that they will be offering to the public. So like how they do the audit, how the security is going to be, and what's like the risk factor. I think one of like the main thing about like crypto ETF is you're giving the Bitcoin to the asset management company, and how can they really take care of the assets,
right?
And because it's on chain, right? If you get hacked, everyone knows.
Yep.
To be honest, like everyone knows, but you don't want that to happen. Like how can they assure the public and the regulators that their system is safe, their IT is good, that there'll be no issue with that?
I think there are more cases of vulnerabilities to get hacked than the security of it, right?
Yeah, I think so. Like just like example, like sometimes you hear the news like how this like gold in the vault, it turns out to be like fake gold, right?
Yeah.
Like okay, so I think Bitcoin it won't happen because everyone can check. But if it get hacked, in a way, then your whole ETF is like worthless. I think that was probably the biggest risk, and I think this is like one of the main thing that the regulators cares the most.
The caretaking
if
part,
they want to allow a spot ETF.
Right. But we are getting there. And we are getting closer and closer. I think last year all these crypto spot ETFs, they were rejected.
Mm-hmm.
This year they are in review. They started to be in review again. We can also see the difference between ETFs and mutual funds. So if ETFs, they are the first part, right? Because usually ETFs track a certain benchmark. They track probably Bitcoin in this case. If this gets through, cross our fingers if it gets through, it is an extremely big news for crypto as a whole. And also it opens up an avenue for things like mutual funds to come into play. So exchange traded funds, they are passively managed, they have low transaction costs, they basically just track something. But mutual funds, they are actively managed by an asset manager, or what we call a portfolio manager. So mutual funds are usually a basket of for the traditional stocks wise, mutual funds are basically a basket of stocks that they picked out, and then it can be things like aggressive, moderate, or less aggressive. So mutual funds actively managed, but they are higher in cost, slightly higher in cost. Usually for mutual funds, there is also a minimum investment amount that is applicable as well. So mutual funds should typically do better than ETFs, but it's not a 100% guarantee kind of thing, because mutual funds, since they're actively managed, every now and then the portfolio manager can tweak a little bit to make sure that the fund itself does better, right? So
the aim is to
do better. Yes,
better
the aim is to do better, and that's why they charge slightly more as well. So if this happens, the volatility of cryptocurrency itself actually serves as a very exciting part for these portfolio managers to play around with a crypto mutual fund. So that's something that I look forward to as well, because Personally, for myself, I'm more of the aggressive investor mindset. So I think that would be extremely exciting to look forward to if it happens.
I think so too. I think this is the end of today's session.
Yep. Thank you so much, everyone.
Thank you so much.
We'll see you guys again
Bye-bye.
next week. Bye-bye.
Bye.
The information contained in or provided from or through this podcast is not intended to be and does not constitute as financial advice, investment advice, trading advice, or any form of advices. The information in this podcast is general in nature and is not specific to you, the users, or anyone else. You should not make any decision, be it financial, investment, trading, or otherwise, based on any of the information presented in this podcast without undertaking independent due diligence and consultation with a professional broker or financial advisory. You understand that you are using any and all information shared in this podcast at your own risk. You are solely liable for any losses that you may incur from investing, and in no event shall we be liable for any losses which may be incurred while investing.